There's a man in Omaha, Nebraska who has beaten the stock market every single decade for 60 years. He manages more money than the GDP of Denmark. And right now he's sitting on a cash pile so large that if you stacked it in $100 bills, it would reach the moon and back. Twice. He doesn't give many interviews, but he gave one recently. And what he said, if you actually listened, should make every investor stop and think. Berkshire Hathaway, the company Buffett has run since 1965. In that time, he's turned a struggling textile mill into a $900 billion empire by doing one thing consistently: buying great businesses when they go on sale, and doing absolutely nothing when they don't. The interview was with Becky Quick, 30 minutes, over lunch. Off the record energy, on the record words. He talked about the market, the cash pile, and whether anyone should be worried about a crash. I went through every minute of it. Here are the 5 things he actually said and what they mean for your money right now. Chapter 1: The Casino. Buffett described today's stock market like this. He said it's a church with a casino attached. People move freely between the two. And right now, the casino is winning. Here's the thing about that image: he's not being poetic, he's being precise. The church is investing. You buy a piece of a business because you believe in its long-term value. You sit with it. You let it grow. You don't care what it's worth this Tuesday. The casino is something else entirely. Buffett specifically called out one-day options, financial contracts that literally expire in 24 hours. He said, and this is a quote, "That's not investing, it's not speculating, it's gambling. Totally." The quantity of one-day options being traded right now is, by his words, incredible. More people are in a gambling mood than at any point in his 60 years of watching markets. Now here's what he did not say. He didn't say the market is finished. He didn't say sell everything. He said the gambling mood makes prices look silly. Silly high. Silly disconnected from what things are actually worth. And when prices are silly, great investors don't play the game. They watch. They wait. They take notes. Here's the number that should reframe how you think about investing forever. In 60 years, 6 decades of watching and participating in markets, Buffett said there were maybe 5 years that were genuinely, truly worth getting aggressive. 5 out of 60. That means roughly 92% of the time, even for the greatest investor alive, patience was the strategy. Not analysis, not trading, not watching Bloomberg, just waiting. He quoted the founder of IBM, who said he was smart in specific spots and stayed around those spots. Buffett's version of that is this: he will only invest in things he genuinely understands, and he will wait for those things to go on sale. Until then, cash. Charlie Munger, his partner for 50 years, who died in 2023 at 99, put it plainly. He said Buffett makes his money when he waits. Not when he trades, when he waits. I want to be honest about what this looks like in practice, because it sounds easy, and it is not. Watching markets go up for 3 years while you sit in cash is psychologically brutal. Everyone around you is making money. Your friends brag about their returns. Social media tells you you're missing out. And you just sit there, waiting. That is the discipline. And it is why most people can't do it, not because they lack information, but because they cannot handle being boring on purpose. This part of the interview is the one that matters most if you're not already rich. Buffett admitted something unusual for a man of his stature. He said he understands fewer businesses now, as a percentage of the total market, than he did 10 years ago. New industries have grown up that he never lived inside, and he won't pretend to have an edge in things he doesn't understand. Edge. That word is the whole thing. An edge means you know something true about a business that Wall Street either doesn't know or doesn't care about yet. It doesn't have to be secret information. It can just be deeper understanding. Here's how Wall Street actually works. They're managing billions of other people's money. Their job performance is measured every quarter. When a company hits a bad patch, a supply chain problem, a legal issue, a bad earnings report, they're out. Fast. Not because they don't believe in the business long term, but because long term isn't in their job description. Staying in a troubled stock until it recovers means looking bad for quarters at a time. Nobody gets paid for that. Buffett gets paid for that. And so can you if you have an edge. The edge isn't stock tips. It isn't watching financial YouTube all day. The edge is your actual life experience in a specific industry. If you're a nurse, you understand healthcare from the inside: the equipment, the billing, the drug cycles, the staffing crises. You know things about hospital management companies that a Morgan Stanley analyst in a Manhattan office doesn't know because he's never been in one. If you work in logistics, you felt the supply chain collapse before it showed up in any earnings report. If you're a software engineer, you can read a product roadmap and know whether it's real or corporate storytelling. That's your edge. Buffett doesn't have it in your industry, you do. And he's literally telling you in this interview, that's what matters. Becky Quick asked him directly, "Do you see circumstances building that could create a panic? A buying opportunity?" His answer was almost funny in how honest it was. He said, "If you could see it coming, it wouldn't happen." The best buying opportunities in his career all came from things nobody saw coming. Not things people were worried about. Not things being discussed on financial TV. Something new. Something unexpected. Something that landed on a Tuesday and changed the way markets saw the world by Thursday. He even said, almost in passing, a nuclear bomb can come out of the blue. That's not him being dramatic. That's him saying the risk you're braced for isn't usually the one that hits. Think about the last 3 major market crashes. In each case, by the time the story was on every front page, the fast money had already moved. The opportunity was there for about 48 hours for anyone paying attention and holding cash. Buffett has lived through 5 of these moments in 60 years. He says something will come again. He doesn't know when. He doesn't know what form it'll take, but he is certain it will happen. And he is sitting on $380 billion, precisely because he wants to answer the phone when it rings and nobody else will pick up. Now here's the question this creates for regular investors. You can't time it. Nobody can. So what do you actually do? You don't wait in cash forever. Inflation eats that. You don't sit out the entire market. You miss real growth. You do what Buffett does. You know your list. The businesses you understand. The prices that would make you genuinely excited to buy. And you keep enough cash to act when one of those businesses goes on sale. Whether from a market-wide crash, or just that company's specific bad quarter that everyone overreacted to. You don't predict, you prepare. Here's the part of the interview where Buffett said something he then immediately walked back. He said, and I'm close to quoting here, "I don't like to tell people the end is coming. I don't like to cause that kind of worry in people." And then he laughed. And then he changed the subject. But I want you to sit with what he said just before that. The market is in maximum gambling mode. There are almost no businesses he wants to buy at current prices. Something will come out of the blue. And Berkshire, his company, is holding its largest cash position in its entire history. $380 billion. He is the man who wrote the famous line, "Be fearful when others are greedy, and greedy when others are fearful." Right now, retail investors are piling in. Valuations by multiple measures are near historic highs. Day trading is at record levels. One-day options are booming. And the man who wrote that line is holding $380 billion in cash. He's not panicking. He's not selling everything and moving to a cabin. He's staying in the market, selectively, in things he understands deeply. But he is not adding at these prices. I'm not here to tell you the sky is falling, but I am going to ask you a direct question. If the market dropped 40% tomorrow, would you be okay? Would you have cash to buy the dip? Or would you be forced to sell at the worst possible moment because you're overextended? Because that's the real danger, not the crash. Being forced to sell during it. Buffett won't be forced to sell. He'll be buying. The question is what side of that transaction you'll be on. 5 things to do this week. Not 5 years from now. This week. First, write down what you actually own and why you own it. Not because it's been going up. Because you understand the business. What it sells, who buys it, why competitors can't easily replace it. If you can't write 2 sentences on why you own something, that's a problem worth solving before the market solves it for you. Second, build your wish list. 5 to 10 companies you genuinely want to own at the right price. Not their price today. The price that would make you feel like you found something on sale. Write those prices down. Third, keep some cash available. Not everything. 10 to 20% sitting somewhere earning 4 or 5% while you wait is not a bad outcome. It's ammunition. Fourth, stop looking at your portfolio every day. I mean it. Buffett doesn't. Daily price checking is how emotional decisions happen. Look quarterly. Review the business, not the stock price. Fifth, respect patience as a skill. It doesn't come naturally to most people. But in 60 years, the greatest investor alive says there were 5 moments worth getting aggressive. 5. The rest of the time, patience was the right call. That applies whether you're 22 and just starting, or 55 and building toward retirement. The math doesn't change. Compounding is slow, then it isn't. Patience is boring, then it pays. Buffett doesn't give many interviews. He chose his words carefully in this one. The casino is full. He's at the church. He has $380 billion waiting by the phone. None of us have that kind of cash. But the approach, knowing what you'd want to buy, knowing the price you'd want to buy it at, and keeping something in reserve so you can, that's not a billionaire strategy. It's just a sane one. If this was useful, hit subscribe. I cover finance the way it should be covered without the hype, without the panic, without the stock picks that conveniently pump after the video goes up. Drop a comment with this: church or casino? Tell me honestly where you are with your money right now. I read every one. See you next week.